In today's video, I want to touch on SoFi, the performance in 2024, what I expect in 2025, and especially touch on something that was announced today. So first, let's start with a major overview. SoFi this year is up 57.25%. It now has a market cap close to $17 billion. Now, of course, if you look at the forward PE, you will say, oh, it doesn't make any sense, right? A bank forward PE is 65.8 times. Well, first of all, SoFi is not a bank. SoFi has a bank. Second of all, even if, let's say, we consider this a bank, show me another bank that grows this quickly, right? If you look at the expectation for fiscal 25 and 2026, sales growth of 17.5% in fiscal 25, with EPS growing 109%. Switching to fiscal 2026, sales growing close to 17% and EPS growing another 72.69%. And remember, the EPS number for 2026 is going to be between 55 to 80 cents. That's what the management is expecting. And as we've seen multiple times, management does not disappoint. Management usually sets the bar, you could say low or not that high, and constantly beats them. The market constantly underestimates SoFi. Now, for long periods of time, the market was underestimating SoFi because it was still thinking that SoFi is just a lending company. SoFi is a lender, and since students' loans have been, well, basically completely removed from SoFi's business, well, maybe not completely, but a big chunk, then everybody was saying, oh, this business will never survive, right? But what has happened in the last 3 years is that not only did they survive, they evolved into something much, much bigger and much stronger right now. And speaking of the student loans forgiveness, well, that's exactly what I want to touch on today. So if you enjoyed this type of videos, hit all the buttons, like, subscribe, do all of that. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. One extra thing here, the current average analyst price target sits 27.28% lower than the price we're at today. And so now let's touch back on the student loans aspect of SoFi. Well, we've got this that came out. Biden administration withdraws student loan forgiveness plan. What borrowers should know. The Biden administration walked away from 2 mass student loan forgiveness plans on Friday, marking an anticlimactic end to the efforts to enact broad student debt relief. Officials withdrew proposed regulations that would have allowed the initiatives to be implemented. The 2 loan forgiveness plans would have created pathways to student loan debt relief for broad swaths of student loan borrowers, including those who have experienced runaway balance growth due to interest accrual and people who are dealing with significant personal or financial hardships. Had the program been enacted, they could have benefited more than 30 million borrowers. Now, of course, when we talk about a company like SoFi, where you can go to them and refinance your loans, especially now that interest rates have come down, things are a bit, well, more attractive right now. For SoFi, this is great. Not only because, well, this could attract new business, but we will not have these types of headlines anymore, right? For 3 years was always hanging above their heads like, oh, are we going to have another student loan forgiveness? How many more? Is that going to impact the business, etc., 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 even though the business has evolved throughout the year. So yeah, this is a plus, a positive, double positive for SoFi's business. Okay, you might say, yeah, but a lot of people will have student loans that they cannot pay, they're in debt. Okay, but plenty of folks throughout many, many years have been paying their debt and did not get their student loans forgiven. So yeah, there is that. But this is definitely a big positive for SoFi and certainly a tailwind for 2025. Now, I do want to touch on a couple of things that were mentioned last earnings call, which were quite interesting. So last earnings call, they said the following: highest average unaided brand awareness ever. That was up 40% year over year to just 7%. So it's still quite early days. Highest home refinancing volume since Q2 2022. I fully expect that to continue, that momentum to continue as rates come down. New partnership with 2 charter banks in Mexico and Galileo for commercial payments. Annualized revenue per product was $81, up 52% year on year. significant growth potential in monetization, especially in the invest business. They will be focusing on member growth, product growth, and revenue per product. The invest business has over 100% opportunity to increase monetization per member. Small and medium business segment is a key growth area. They've made no decision about large deals with big financial institutions. They're still confident of future wins in the tech platform business, and they say that large financial institutions are struggling with technology transitions. Why am I reading this again, and why are we going to look at these things again and again? Well, it's because people think, oh, the stock is up already so much, right? $17 billion, $16 per share approximately. Then maybe this is the end of the ride. But no, I still think that we're very, very early, not as early as a year or two ago, but still very early days in this SoFi journey. I think, yes, they will eventually become a top 10 financial institution in the United States. It's not a question of if that will happen, it's a question of when that will happen. So currently, if we look at these members, for example, exceeded my expectations last quarter. Yes, these are the new member additions. They have, of course, lost members during the quarter as well, but this is, of course, tremendous growth. If you look at products, same thing here. Galileo accounts, we've had a slowdown back here in 2023, but then that reaccelerated. And of course, this is basically the picture, right? We've seen that previously, the majority of their revenue came from, all other adjusted net revenue, and only a small portion came from financial services and tech platform. Well, last quarter, that was almost a 50-50 split. Not only that, what did we also see last quarter? Well, we saw that for all segments here, lending, technology platform, financial services, the contribution profits, all record contribution profits. And so what we continue to see is adjusted net revenue still continue to grow quite quickly. Last quarter, that increased 30% year over year. Quarterly adjusted EBITDA with an EBITDA margin of 27% compared to 23% the quarter before that and 18% same quarter last year. As for guidance, they also raised it a little bit, so expect net revenue to increase 22 to 23% year over year. If we take the high end of guidance and we subtract the last 3 quarters, the next quarter should basically come at $683 million, and they will hit that number. Consensus number sits at $677 million. So consensus number for Q4 is already lower than the number for SoFi to hit the high end. And as we've seen with SoFi time and time again, they usually beat their own guidance. I wouldn't even be surprised if next quarter revenue comes in at $700 million. Now, as for next year and the years after that, this is going to be quite an exciting part of the business. And that's their shift towards a more fee-based, capital-light, and lower risk revenue source. They said that combined fee-based revenue made up $174 million, or a quarter of their adjusted net revenue in Q3. This revenue grew by 65% year over year. On an annualized basis, that's nearly $700 million in revenue. This progress was driven by a record quarter in our loan platform business, which totaled $56 million in fee-based revenue and is up more than 5x year on year, as well as strong growth in interchange, which is up 2x year over year. And I mean, this is just the start. And since this is fee-based, capital light, the margins are going to be quite good. More recently, we've had 2 announcements as well. So one, SoFi to adopt Galileo Cyberbank Core for sponsor banking, and Mesh Payments teams up with SoFi Bank and Galileo to drive innovation in travel and expense management. What are the benefits of this partnership? Well, accelerated product development. SoFi Bank sponsor program is built on Galileo's powerful tech platform. So here already some positive momentum maybe for the tech platform, eliminating traditional inefficiencies between separate providers, enabling faster delivery of enhanced feature and services. Regulatory expertise. Galileo, a subsidiary of SoFi operating under federal banking regulations, ensures enterprises benefit from solutions that align with strict compliance standards, providing confidence in secure and reliable financial operations. And the last one here, operational efficiency. With real-time data, automation, and centralized visibility into spending, enterprises benefit from improved compliance and reduced delays. And I think we're going to see more and more of these announcements because, yeah, maybe in 2025, that's when we're going to see the power of SoFi, the AWS of fintech. So far, it's been a lot of talk about, oh, we are going to be the AWS of fintech. But maybe in 2025, that's when we're actually going to see the power of the whole ecosystem. One extra thing is with regards to crypto. Since they have a bank, they stopped offering crypto. But with the Trump administration, if, let's say, regulation does change, Anthony Noto already said on X that they will try to be the first one to reintroduce crypto and be the first, let's say, bank to offer those products. I think that could be a huge tailwind. But then again, could be, if that ever happens. And so in 2025, what do I expect? I expect continued execution, continued growth top and bottom line especially. I am expecting more announcements with regards to the technology side of things. That's at least my hope. And other than that, nothing. I think the SoFi brand will just become more recognizable in 2025, which will lead to more members, which will lead to more revenue growth, and of course, the profitability, net income should increase accordingly. And so, yeah, right now, if we look at the stock, yes, on the weekly, we are still overbought. What's interesting is that we are sitting just above the 20-day moving average and currently holding. We've been under it a couple of times, but now we are over it and we are holding. The 50-day moving average sits at $13.72 and the 200-day one just under $10. So overall, good news with regards to the lending side of the business. But let's be honest, so far it's been quite a while since that's not really that important for the success. It's nice to have that tailwind right now, but it hasn't been really the big part of their business. Plus, SoFi's customers usually would not have been included in those student loan forgiveness programs anyways. So there is that. 2025 will be another good year for SoFi. That's my expectation. Will the stock continue to go higher and higher? I think the stock will follow what the business will show. And so far, they've shown that they can, execute close to perfection. So I think the focus will definitely be maybe on more momentum with regards to the technology platform in 2025. What do you think? Let me know down in the comment section below. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.